Hi, welcome to Let's Talk Forex with Alison and Chris. So in this episode, we've got something very special lined up for you. We're going to be talking you through 7 hacks to improve your win rate. As always, if you have any questions, please don't hesitate to contact us on podcast@ethicscouts.com or reach out to us on any of our social media channels. Enjoy the episode.
Hey, Alison.
Hey, Chris, how's it going?
Yeah, not bad. We're recording on a Friday for a change, which is nice. It's got that Friday feeling, though the sun is refusing to cooperate. The sun is not having a Friday feeling. It's overcast and grey. End of August in Portugal should be 35 degrees and glorious sunshine, but no, it's like 18 degrees and looks like it's about to start raining. So that's a bit annoying. But other than that, I'm fantastic. How are you, Alison?
Yeah, well, you'll be glad to know we're also cold here.
Mm-hmm.
End of August, and typically it is cold, and it is cold.
Yeah, no, I'm sure.
Yeah.
I was talking to one of our colleagues who's in Cape Town and saying it was snowing in Cape Town, which is outrageous.
Well, with the wind here, I can definitely feel the snow on the mountains. It's very icy.
Icy, yes. No, it's not. Okay, yeah, that sounds much worse than it is here. So I take it all back. I'm very content with the weather.
Yeah, and a warm welcome to you, our traders. So today we're going to be, as I said, we're going to be talking about 7 hacks that you can use to improve your win rate, and we're going to be making sure that they're practical and that they're easy to implement. So with that, I guess we should get started.
Yeah, absolutely. That's right, Alison. So the first one is pretty fundamental. It's don't look at your profit and loss.
Yeah, I mean, it's super tempting to keep an eye on what your profit and loss is doing. But what we find is that if you're doing this throughout the day, it starts to mess with your trading psychology. Because basically, whether you're winning or you're losing, the profit and loss tends to have an effect on how you trade during that day or during your session.
Yeah, exactly. And if you see that you're up, you get overconfident, you start making impulsive trades. And if you're down, then fear and anxiety can push you to other rash decisions. Very common one is exiting a trade too early, and the really worst one is doubling down to try and recover your losses. So instead, you want to focus on your strategy. You want to know precisely where you plan to enter, exit, and how much risk you're taking.
Yeah, and our actionable tip basically is just hide the profit and loss from your screen. Check it only at the end of your day or at the end of your session, however you manage your trades, and ensure that the profit and loss just doesn't affect how you execute your plan, because that's often what happens is if you're if you're losing, as you said, Chris, you're going to either double down and you start to make very poor trading decisions. So simply hide it from your screen is probably the best thing you can do.
Yeah, I agree with that. It's a really good idea. So yeah, moving on to hack number 2, use limit orders, not market orders. What do you think about this one, Alison?
Yeah, I mean, I find that a lot of traders, when they spot a good trade, they just want to jump in with both feet. And the problem with this is, especially in a fast-moving market, you might experience a lot of slippage. I find limit orders for me are help me to stay more focused and more disciplined, and they help me to get in at a better price. And also, it helps you just to execute your plan better. If you're waiting for price to hit a certain level before you enter, the limit order will almost force that. So it really does help with the discipline.
Yeah, exactly. And ensures you don't get in a panic move, and often result in a better price as well. So the actionable tip here is, if you want to enter quickly, if you see, market setup that fits with your risk strategy, fits with the trading strategy, and you want to jump in, set your limit order slightly away from the current market price. And this forces you to stop and think and say, is this really the best price that I've got here? And it helps prevent those knee-jerk reactions, which you're trying to avoid.
Yeah, absolutely. And our third tip is keep a trading journal or document your trades. I know it's something we spoke about last week, but I find it so valuable to keep a journal. And you can take it a step further by documenting why you got into a trade and how you felt about the trade. I know this is what we spoke about last week, but I just think it's such an important point. Yeah,
exactly. And it's often the reasons why you enter a trade is because of a news event, or a technical setup. Is there a gut feeling, is there something? And so it's not always going to be an emotional thing. It's not always going to have an emotional side point to it. It may be an interest that you have, maybe something that you've seen in the news, what made you make that connection? That's really important to keep track of those things. And because over time, these notes are going to become valuable, and they're going to help you define what works and what doesn't work for you. And it forces you to stay accountable and reflective on what drives your own decision making. And both, this is really important for continuous improvement in your trading.
Yeah, I mean, you just basically want to, jot down a quick note about why you made the trading decision, as you said. And what it'll help you to do is to look back and spot those patterns in your decision making. And then it'll allow you to actually take actions to improve it.
Yeah, absolutely. And it'll let you figure out what led to successful trades and what leads to your losses. It's such a big thing. And this brings us on to hack number 4, which is take a break after a big win or a big loss.
Yeah, again, something we spoke about last week. I mean, minimizing your losses and improving your win rates are almost the same thing in a way.
There's a lot of crossover.
Yeah. I mean, emotions, they run high after a big loss, of course, or after a big win. So sometimes the big wins can make you overconfident, and the big losses can cause you to, go on a revenge trading rampage, for example.
Yeah.
So you really need to be quite aware of, just taking a break, whether you're winning or you're losing. Step away from the screen, have a walk, meditate, do whatever you need to do to sort of reset and get your emotions under control.
Yeah, I find that food helps. Lunch is a great idea. Or some kind of snack, and so it gives you, as I say, it gives you time to reset, your emotions and actually reflect on what happened. Were you lucky? Were you unlucky? Did you execute your strategy perfectly if it was a big win, or did you make a mistake? And what was it? What was that mistake? Or was it just the markets moving against you and there was nothing you could have really done about it? So yeah, use that time. Like I said, as Alison said, meditate, eat a sandwich, go for a walk, whatever works for you. And just regroup and come back with a clear mind.
Yeah, and our hack number 5, I guess, is quite an interesting one. And again, related to a lot of what we said last week. But trade less. This often sounds counterintuitive just because, you think the more that you're in, the more potential you have to make money when you're in the market or you're watching your screen. But over trading means that you're risking your capital. If you take a step back, look at your trades and find the perfect setups rather than setups that don't quite fit your trading plan, but mean that you're in the market, you're really going to find that it improves your win rate as well.
Yeah, exactly. It's really about quality over quantity here. And it allows you to be more selective and only take trades that meet specific criteria. And this approach, not only will it help you conserve your capital, you're going to improve your win rate, which is the entire point of this episode, but it's also going to improve your overall performance. And it's going to make you feel better about yourself. It's going to improve your trading psychology.
Yeah. And on this point as well, you want to review your trades and you want to only take trades that, again, fit your highest quality setups. I think that's a very important point. And I think it's something that a lot of traders falter on, especially beginner traders.
So yeah, next up, hack number 6, which is spend more time reviewing yourself than the markets. Do you want to explain this one, Alison?
Yeah, I mean, I think, this is probably the biggest way you will improve your win rate is spending time reflecting on your own emotions and your own emotional makeup and how you react to wins or losses. Traders often spend many hours looking at the market and the market conditions, looking for setups, planning trades, but they really focus on their own emotions, their performance, and their behavior during certain market conditions. So this is something I would focus on as well. I know it's made a big difference to my own trading.
Yeah, it's really important. Knowing your own strengths, your weaknesses, the emotional triggers, it's actually, far more valuable than understanding the market. I remember when we interviewed the analyst from HFM, their head analyst, he said, in his one-on-one classes for beginner traders, that's all he talks about is trading psychology. He says, the technical analysis, the fundamental analysis, all of this can come later. Really, what you got to deal with first is yourself. And so that self-review, it's going to help you refine your trading plan. And it's going to help you adjust your strategies, and it's going to it's going to improve your discipline as well.
Yeah, I mean, you really just want to then dedicate time to each week to review your trades and your performance, and you want to focus on your decision-making processes, on your emotional responses to different, to how different trades went and how you responded to them. And then also you want to look at how you adhere to your strategy, and what causes you to veer off your plan.
Yeah, really important, because everybody does it at some point, and it's really important to pinpoint that, what triggered that. And finally, to hack number 7, which is help other traders.
Yeah, I mean, this might seem unrelated, but when you share your knowledge and, what works for you as a trader, you really improve your own knowledge, because you kind of have to double check whether what you're telling somebody else works, or whether it's right, or whether you can find those setups on your charts. I know it's something that's improved my trading dramatically, is teaching other traders how to trade. I remember as a kid at school, the kids would come and ask me to help them with their maths. And I know that benefited me as much as it benefited them. And the same is true with trading. It really makes a big difference when you're teaching other people how to trade.
Yeah, it does. And also, it builds a sense of community, and it's really important, I think, to have a sense of community in trading. Traders can feel very alone sometimes, very isolated. And by mentoring others or being mentored by others, you become part of the trading community. And that's really important. A really important aspect. That'll help with your trading psychology as well. But you're also, as you said, Alison, you're going to, by mentoring others, you're going to gain insight into your own trading style. Mm-hmm. You're going to be like, oh yeah, people are going to ask questions and force you to reflect on why you make certain decisions or why you do certain things. And it's also, just going to be good for you as a person, frankly. At the end of the day, you're going to cultivate your patience, your humility, and these are also not just great human qualities, but also great qualities in a successful trader.
Yeah, and I think importantly what you said there, Chris, is that it really helps you to look at your own trading and say, why did I make that decision? Mm-hmm. Because you're going to have to tell somebody else why you made a decision. And sometimes our trading can become a little bit automatic, where we kind of execute trades without really thinking quite deep enough about why we're executing them, especially when you've been trading for a while, of course. So I think, if you're explaining it to somebody else, you might actually say to yourself, hey, that's actually not a good idea in this market or in this situation. Let me try refine that a bit, or maybe it is, and let me explain it, explain why it is. So either way, I think it's a very important part of trading. And to do that, sort of from an actionable point of view, you could participate in forums, or you could start a trading group. There's plenty around. Reddit is rife with trading groups. I don't know if I'd always trust everybody on Reddit,
but yeah, I'd be a bit careful with Reddit. But there's a lot of good trading communities. Yeah, absolutely.
Yeah. So from my point of view, I think that's it.
Yeah, it is. I think that's right. That's the 7. So there's quick trading hacks. They're going to help enhance your trading and hopefully help you on your trading journey. And the actionable steps as well, I think, are really important next to those. And those are the kind of things that you can implement today.
Yeah, and if you found today's episode valuable, please don't hesitate to subscribe to our channel and to like. It means that we can continue to create more content like this, because we know what traders are looking for. And, as always, send any questions through to us at podcast@fxscouts.com.
Yeah, exactly. Thank you so much, Alison. This is fantastic. Look forward to speaking to you next week.
Yes, me too. Thanks, Chris.
Cheers, then.
Cheers.